Good afternoon from Hong Kong. My name's Richard Byworth and I'm the CEO of EQONEX Group. We're a full-service crypto financial firm. And almost exactly 1 year ago today, EQONEX made history as the first company with a cryptocurrency exchange to be listed on a US equity market when we listed on NASDAQ. A year on, this may have been the first indication that the industry was at the start of an inflection point. We've seen a huge amount of institutional adoption over that 1 year period, and a year in crypto is like a decade in traditional finance. So let's look at that year in review. In that past year, Bank of America research note issued just last month acknowledged that the digital asset space is now too big to ignore. They valued the industry at $2.8 trillion as of June 2021. And with 221 million users worldwide who've traded a cryptocurrency or used a blockchain-based application, 4 times higher than a year earlier. That same Bank of America research report noted that capital investments in digital assets and blockchain technology surpassed $17 billion in the first half of 2021, and that dwarfed the $5.5 billion from the same period last year. And we've seen some of the most famous investors in the world, including Paul Tudor Jones, Stan Druckenmiller, BlackRock, and now PIMCO, adding crypto, predominantly Bitcoin, to their portfolios. We saw the first country, El Salvador, officially announcing that it would accept Bitcoin as legal tender, and Bitcoin itself reached record highs of almost $67,000 after the long-awaited listing of America's first exchange-traded Bitcoin futures fund. That's a milestone that was nearly 9 years in the making. Canadian regulators also approved ETFs that hold Bitcoin directly in February this year. Banks and financial institutions such as Morgan Stanley and Goldman Sachs are beginning to integrate cryptocurrency services for their clients, while corporations, including Tesla and MicroStrategy, have added Bitcoin reserves to their balance sheets. We saw Fox Corporation as the first major media company to enter the NFT market with its $100 million Blockchain Creative Labs fund. Disney, iHeartMedia, and Warner Music also have current and potential NFT projects in the works. And Visa went on record as having bought a CryptoPunk NFT. So what does this all mean? Well, one thing is clear. Some of the largest institutions in the world are beginning to realize that crypto is not going away. If you're a financial services firm today that does not have a strategy around crypto, you're a very short time away from entirely missing one of the largest shifts in generational wealth the world has ever seen. Institutional participation has gone some way to help further legitimize the space, but this has been in concert with increasing regulation. And as noted earlier, the SEC's approval of the first Bitcoin ETF is significant because it marks a shift in the way that regulators are considering crypto as an asset class. So greater clarity and frameworks from regulators are slowly relieving some of the challenges in the marketplace. The global regulatory environment, which previously struggled to keep pace, is slowly catching up, and this is lifting confidence and trust in the space. China, on the other hand, has gone with an aggressive ban of anything relating to crypto. But this is largely around concerns for investor protections in a market that is being led by retail. Heavy retail participation is indeed what presents much of the opportunity for some of the trading-focused institutions. But it also means that investor protections need to be a focus. And while regulation is still in its early inception, it's important that institutions focus where this foresight for regulation, and particularly investor protection, is embedded culturally. Investors need to be protected against exchanges making markets against their very own clients. They need to be protected about the next crypto scam. And indeed, at EQONEX, we're passionate about investor protections around these conflicts and concerns, which in turn provides reputational protection to the institutions that use our platform. Questions about regulation often come first, but are quickly followed by the question, how do we participate in this opportunity? And the answer to the question highlights that this is indeed an industry being led by retail adoption. Around the time of the US futures ETF launch, we actually saw funding spreads on the 24-hour crypto futures markets blow out to above 100% annually. And this is driven by retail, and the returns for early hedge funds moving into the space have been seismic. And to give you an example of how seismic they've been, Bletchley Park Asset Management, our own fund of crypto hedge funds, which is entirely focused on alpha with a heavy tilt towards market neutral strategies, has returned 85% in the first 8 months of this year. And while alpha is great, many of the financial markets players have recognized that the beta opportunity is also huge. Institutions like BlackRock and PIMCO are inherently efficient at directing and redirecting capital to drive investment returns, and notably these two titans have moved into the space. In the past 2 years, the pandemic has affected nearly every aspect of the global financial system, and crypto has offered some of the very best returns in this environment. Bitcoin's up 280% over the past year, and Ethereum and other altcoin assets have fared even better. Ethereum's up 895% over the same period. And retail investors in the Twitter crowd may be the loudest in the room, but traditional investment firms, hedge funds, endowments, corporates have been quietly getting increased exposure over that period. And finally, many institutions are noticing that beyond the investment story, the technology behind Bitcoin, the blockchain, can enhance operational efficiency and resolve legacy challenges. The tokenization of assets is likely to lead to huge cost savings and the removal of layers of middlemen, and ultimately completely upturn the business of investment banking. Some of the world's largest banks have already been involved in the issuance of bond instruments on blockchain rails as security tokens. And the compressed yields that we see in the fixed income space means that any cost savings can have a huge impact on significantly increasing returns to investors. And so many of the banks, whilst looking for a trusted and reliable infrastructure provider for crypto, are also extending that search for those that can accommodate the security token world. There's no crystal ball to predict what will happen in the next 12 months. But from my conversations with my peers, my clients, I can give some insight into some of the emerging themes that we're seeing on the path ahead. Firstly, compliance and credibility are critical. No matter what the reason for institutions looking to get involved, be it on behalf of clients or to hedge against the future disruption of their industry, or indeed for their own balance sheet investments, these institutions are searching for credible, trusted players to do business with. Discerning which organizations to partner with can still be a challenge, but greater regulatory involvement and accreditations are delivering more certainty. And we at EQONEX made the decision early on prioritizing compliance and credibility. It's part of our DNA. It was also the rationale for our listing on NASDAQ, as it makes us accountable to their listing rules, but also the oversight of the SEC and of course our shareholders. And it was also why we were committed to registering our custody business, DigiVault, with the Financial Conduct Authority, the UK regulator, as a crypto asset firm, becoming the first standalone crypto custodian to be awarded that regulatory approval. We see the trends towards trusted institutions with regulatory backing only continuing. Partnerships between the old and the new will continue to emerge. And one of the bigger challenges is navigating how traditional trading systems and operational processes can be integrated with the crypto ecosystem of markets and custodians. Different companies are taking different approaches. In many cases, those that are willing to meet the banks where they are will find a competitive advantage. It doesn't necessarily have to involve building compatible services from scratch. We can see collaborations and partnerships are going to be crucial in helping to provide a bridge from the existing banking infrastructure to the digital asset ecosystem. So to conclude, really two things are very clear. The changes taking place in the financial industry, predominantly through crypto participation, are transformative, both from an investment returns perspective, as well as in reshaping and enhancing the way we conduct business. Second, the pace of adoption from both investors and institutions is happening at a faster pace than ever before, faster even than the adoption of the internet, and it's only getting quicker. I'm excited to see what the next 12 months will bring to this fast-moving, ever-evolving marketplace. And we look forward to continuing to play a role in driving the industry forward. Thank you for your time, and if anything I've said today has piqued your interest, please reach out to us at equonex.com or email me directly at richard.byworth@equonex.com. Thank you very much.